It's been quite a volatile period for oil, starting with the banking crisis in March, which caused the price of oil to plunge on fears that the economy was going to suffer as a result of tighter credit conditions. That was followed by OPEC Plus surprisingly announcing a 1 million barrel a day cut to production, and not just doing so, but doing so over a weekend, which means that the market gapped open on the Monday and possibly exacerbated some of that move. And that volatility seems to have now come down as the dust has settled on all of this activity. And the question now on everyone's lips is, where will it ultimately lie? It looks at this point in time like it's moved back into a prior trading range where we were between December and March. But I don't think the price has fully settled down at this point, to be honest, nor do I think financial markets have a full grasp on what the full ramifications of the mini banking crisis are going to be, or even how strong China's economic recovery is going to be following the transition from zero COVID to living with it. We're still gathering information, we're still gathering data, and we're still trying to get a better grasp on what state the global economy is ultimately going to be in later this year. And that's before we even take into consideration the fact that inflation is not being solved. Interest rates are still rising. The terminal rate for many central banks is still shifting in the markets, and central bankers remain quite hawkish. And interest rate levels at the end of this year are constantly changing as well. All of this is going to have big impacts on how the global economy is going to fare over the course of 2023 going into 2024, and therefore ultimately what the demand outlook for oil is going to be. We've heard from Russian energy minister today, who said that he believes that the market is relatively balanced at this point following that production cut from OPEC Plus last month. But of course, that is subject to downside risks as well as upside risks as well. One of the key downside risks, of course, being China, but as we've already mentioned, that mini banking crisis, the full ramifications of it are still relatively unknown. One thing we can guarantee is that OPEC Plus will not hesitate to step in and adjust the markets once more. And this is where the price, I do think, comes into it. OPEC Plus has repeatedly pushed back against any suggestion that they are price reactive as opposed to market reactive. And by market, I mean how balanced the market is, supply and demand. But we've seen quite clearly on a number of occasions now that the price of oil has influenced their decisions ultimately. And on that, let's take a look at a chart to see where we're currently lie. And you can see what I was talking about December through March. We had relative price stability at this point. That was around maybe 78, 79 dollars a barrel, 77 even at one point. And then the peak was coming around $90, maybe a little shy, around $89 at times. But we were basically fluctuating between those two levels for 3 or 4 months. And it was only once the SVB collapse happened and all the events that followed that the price of oil started to tumble. And it started to gradually recover, and it was the OPEC Plus decision then. And you can see that from the big green candle at the start of April. It was only then that the price really started to spring higher. But as I said earlier, as the dust has settled, price seems to have corrected back into that range it was trading in through December and March. The question now is whether we're going to remain within that range once more, and whether that adjustment from OPEC Plus has simply shifted the dial back, whether it's just shifted the balance back in favor of price action between those two levels, or whether demand concerns, and more importantly, global economic concerns, is going to see the price slip once more and move back towards the levels that we were seeing in mid-March. And this is where the price sensitivity of OPEC Plus ultimately comes into it. If we see it move back towards that level, are OPEC Plus likely to respond before their next meeting in order to try and correct this market, or will they believe that this is a signal of slowing demand expectations? I think this is going to be a really interesting one to watch now going forward. There is also the other factor at play here, which is how will traders respond to prices when they do, or if they do, move back towards that kind of $70 a barrel level, which is where OPEC Plus, which is what triggered ultimately the response from OPEC Plus just a few weeks ago. Will traders become more cautious, more apprehensive, fearful of a further intervention from the alliance of OPEC and other producers, including Russia? The other alternative is we do see further demand. We could see a softer landing in the global economy, We could see, as the markets currently expect, for example, one rate hike maybe at most in the US, and very few rate hikes elsewhere, and even rate cuts later in the year. And once we start to see the economic data adjust to that, and we start to see that reflected in the inflation data, and maybe even see a shift in tone from policymakers, that could potentially soften the blow to the economy, and because the economic expectations rise, at which point that $90 a barrel level becomes much more interesting again, not just because it represents the peak of where we saw previously, but also that's where we've got the 200 233 day simple moving average band coming back into play as well. It wasn't that long ago, just a few weeks ago, in fact, when OPEC Plus made that surprise announcement, that many, or at least some, thought that this was going to be the catalyst for oil to move back towards $100 a barrel. That has not materialized at this point, but that doesn't mean that it won't materialize if the economy does perform better. So many different factors really to bear in mind at this point in time. So many moving parts, and I really think the next 2 months are going to be really pivotal in terms of determining where supply and demand is going to lie, how the global economy is going to fare, how inflation is going to be over the course of the rest of the year, and therefore what central banks will ultimately going to do with interest rates on the back of tighter credit conditions because of what we saw last month. It is going to be a fascinating couple of months, and I think we're going to see a lot of volatility, therefore, in oil prices.